now we're sitting down 875 points.
We've now broken Dow 10,000.
The Dow Jones Industrial Average dropped more than 900 points.
They are ping-ponging back off each other.
People are seeing this, and those memories of fear are coming back.
Gamble.
Proctor's trading at 60.
I asked them what the heck is going on down here. I don't know.
All of a sudden here, we started hearing screaming, buy, buy, buy.
For more than 233 years, Wall Street has been the pinnacle of capitalism and social status. Men in suits exuded confidence in their expensive attire and glamorous lifestyle. But now, Wall Street secretly faces its worst adversary in its entire history: decentralized finance. Decentralized finance does not require superbanks, absurd fees, opening and closing hours, or intense political lobbying. Any country or person can trade, invest, or withdraw funds. Fortunes are made and lost within the order book, which is open and verifiable by anyone but maintains anonymity. DeFi platforms already generate more trading volume than the entire Nasdaq, and chaos is setting in on Wall Street. More than 16,000 jobs have been cut among the 12 largest banks, including Citi, Societe Generale, Deutsche Bank, and others. The decline of an icon of capitalism giving way to a new icon: modern, flexible, and democratic. DeFi, decentralized finance. The stock market has been around for a long time, but what we know as the Wall Street style was born in the 1980s. Power, excess, and the culture of the trader immortalized in films such as Wall Street and, decades later, The Wolf of Wall Street. The lifestyle was the goal of all middle-aged young people at the time, driven by movies. The trading floors were like stadiums, noisy, chaotic, but very profitable. Fortunes and scandals arose side by side. Everything changed with the advent of electronic trading. Brokerage firms adopted fast software, while the trading floor lost ground. After the 2008 crisis and the popularization of online information, the collapse was inevitable. By 2012, more than 16,000 traders had lost their jobs. Bonuses of $1 million and sports cars were no longer as common among top traders. Today, the noisy trading floors have almost disappeared. Only a few traders start the trading session there, leaving Wall Street silent, a shadow of its former self.
Viral pneumonia has hit central China's Wuhan city. Authorities have reported
A dramatic increase in coronavirus cases in Italy.
The fastest correction the stock market has ever seen.
We are urging Americans to not travel to the areas in Italy.
Markets were already unstable, but with the arrival of a global pandemic, the S&P 500 plummeted 34% in a matter of weeks. To prevent a major collapse, the government sent out stimulus packages, the so-called helicopter checks. With extra cash and time at home, millions of people have returned to investing. Platforms such as Robinhood have recorded record volumes. But excess liquidity opened up space for something beyond Wall Street. The crypto world already existed, with Bitcoin, Ethereum, and other currencies, but now an alternative emerged: decentralized finance. The so-called DeFi summer began in 2020 and quickly gained momentum. But what is DeFi? DeFi stands for decentralized finance, a system that operates without banks or brokers. Everything happens on blockchains, immutable digital ledgers where information cannot be deleted or altered. In these protocols, anyone can lend, borrow, trade assets, or receive interest automatically through smart contracts. It is the promise of an open, global financial market without intermediaries. To understand in numbers, see how the crypto industry is creating solutions with these key players in the market that can be called as protocols. Checking the apps used in this DeFi summer of 2020. Maker, DAO, total value locked, or deposits, approximately $5 billion by end of 2020. Roll, minted DAI, a synthetic dollar backed by crypto collateral, allowing anyone to borrow without banks. It provided decentralized credit to anyone with crypto. Uniswap, total value locked, or deposits, approximately $3 billion by end of 2020. Roll, decentralized exchange, developed a technology called automated market making, allowed anyone to swap tokens directly and earn fees by providing liquidity. No brokers needed. DYDX, total value locked, or deposits, approximately $50 to $100 million in 2020. Role: on-chain perpetual contracts and margin trading, enabling decentralized derivatives without Wall Street intermediaries. By 2023 to 2024, some DeFi platforms were handling more daily trading volume than Nasdaq itself. Perpetuals, on-chain derivatives, are driving this growth. Platforms like Hyperliquid, Aster, and DYDX allow anyone to trade high-speed contracts without intermediaries. For the first time in history, Wall Street is not just being challenged, it's being surpassed in real time. But the difference is more than just trading volume. It's about appeal. Traditional banks and brokerages are rigid. They're forced to rely on high fees and old-school marketing. DeFi protocols, however, have a secret weapon: the community. Platforms like Hyperliquid, Aster, and Uniswap use airdrops and point systems, essentially free money, to reward users for participating. This is a marketing tool and a massive incentive that banks, restricted by regulation and bureaucracy, simply cannot offer. It's not just a financial challenge, it's a cultural one. Pause for a 10-second ad. Looking to compete, create, and win in crypto? HackHack.fun organizes the best crypto hackathons, both in person and online. Amazing prizes, top payouts, and a community of innovators. Join the action and leave your email today at hackhack.fun to participate or organize a hackathon. Hackhack.fun, link in the description. Wall Street did not stand still. Although famous players such as BlackRock, Van Eck, and Fidelity anticipated and announced extremely successful ETFs in 2023, the rest of the market tried to modernize with asset tokenization on the stock exchange. Robinhood created its own protocol on the Arbitrum network to trade 24/7, just like with crypto. But everything still seems slow and without mass adoption. Kraken, Coinbase, and other crypto exchanges are preparing to eclipse banks with their own services, taking many customers away from well-known banks such as Merrill Lynch, JP Morgan, and others. One strategy that banks continue to promote is that crypto is a place completely taken over by criminals, even with research showing that through blockchain, criminals can have their identification more quickly. The hope of many banks to enter the crypto market rests on stablecoins. But what are stablecoins? They are digital assets designed to maintain stable value, usually pegged to the dollar. They combine the speed and programmability of cryptocurrencies with the stability of traditional money, allowing you to send money quickly, invest, or lend without worrying about extreme volatility. Many American banks, such as JP Morgan, Bank of America, and Citibank, plan to use their credibility to win over users. Some already have stablecoins for internal settlements, but entering the retail market will be challenging. The battle between Circle, the issuer of USDC, and the Hyperliquid platform illustrates this risk. Hyperliquid uses USDC, but plans to launch its own stablecoin, USDH. If successful, the platform will be able to issue stablecoins faster than banks, capturing customers and accelerating products in DeFi. While Tether and Circle have the know-how, banks are constrained by regulation. For them, the scenario could quickly fall apart. It is certain that banks will not disappear. Regulatory battles continue, and many banks are lobbying for greater flexibility so they can compete with fintechs and crypto companies. But with lending and borrowing platforms and perpetuals generating more than $123 billion a year, banks want to grab a significant share of them. But it is unclear whether they have been able to move as quickly as startups. In addition to the crypto market, tokenization is something that banks want to embrace. Something that is already running at full speed in Asia, capturing billions of dollars mainly in the tokenization market for real-world assets, such as houses, buildings, and physical equipment, assets known as RWA. This is yet another race that Wall Street is chasing and may end up losing to DeFi. Crypto Premium delivers the best stories at the intersection of finance, technology, and culture. With bold reporting and cinematic storytelling, we uncover the forces shaping the future of money and markets. From exclusive interviews with industry leaders to deep dives into global trends, Crypto Premium goes beyond the headlines to bring clarity, context, and originality to the world of digital assets.
Crypto got you feeling like you need a flowchart? Stop scrolling. Tune into the Chain Flow. We dive deep into complex topics from DeFi to NFTs, but we keep it simple, friendly, and full of laughs. No jargon, just good analogies and honest 40-minute debates. Get clarity, not confusion. Search the Chain Flow on your favorite podcast app or YouTube. That's THE Chain Flow.